Good morning, everybody. My name is Pete Renzulli, bringing you the morning call for T3 Live today. Black Friday, one day after Thanksgiving. Hope everybody had a very, very nice day with your family. Football, sports, turkey, relaxing all day with your family. What else could be better than that? Back to work today. Interesting day setting up today. We had, as was expected on Wednesday, relatively light volume. Spiders barely got to 80 million shares. A few stocks did have some moves. We're going to get into that. But more importantly, we're going to get into a few technical setups that are setting up off the charts today. I think we should have some actionable signals today. Market's closing a little bit early today, closing at 1 o'clock. So I believe that the majority, in my experience now, it's over 12 years, we're probably going to have the bulk of what we can expect to be tradable today in the first 90 minutes to 2 hours of the day. Right around 11:30 New York time, I think everything will start winding down, and we'll just start to see hardly any movement at all and hardly any print. So the biggest advice that I could give you today, heading into taking risk from a risk management perspective and a risk-taking perspective, is especially if it's a day trade. Especially if it's a swing trade, it's not as important, but if it's a day trade and you're looking to get involved today, make sure your stock is printing. But what I mean by that is, you have level 2 where you have the quotes, and then you have the transactions that are actually going off in time and sales. Be sure that your stock has some activity today and you're actually seeing consistency in printing, and be sure that you have sufficient liquidity to get out of a stock if it should happen to move against you, because on a day like this, typically the opportunities to justify the risk are a little bit fewer than you might have on a normal day, heading into what now is going to basically be a 2.5-day weekend, 4-day weekend for some people. So make sure, in the course of your trading career, and especially in the course of your month, that you're taking risk when it justifies it, because the reward is there. So if we get some decent price action the first couple hours a day, absolutely can get involved. If you're not, be perfectly okay with stepping aside. I have a few setups today that we're going to go over, maybe about 7 to 10 stocks. A couple of scenarios that I noticed on Friday. A couple of things that were constructive and a couple of things that were not constructive as far as wanting to be long. So I'm going to go over those briefly, and then we can make a call on what we think is going to unfold today. So I guess we're going to start out with, we're going to go to the SPYs and the VIX and the financials in that order, and then we're going to cut into a few stock opportunities that I think we could take a look at today. So if we can get started here looking at the spiders, some pretty constructive action. A massive amount of eyeballs have been given to this day last week, where we had a huge outside reversal, closed above the open, and did it on really solid volume. That's very, very constructive. Now we gapped up the day after that, which is even more constructive. And actually, I want to point out one thing. I get quite a few emails in the private mentoring about moving averages and them being a little bit different. Be sure that when myself, Scott, Evan, Mark, Mike Lee, Steve LeVay, any one of us call out levels that we're looking at on the charts, make sure that we're all looking at the same moving averages. As you can see here on the charts, we're looking at the exponential moving averages. So when we were talking, we'll get into Apple in a few minutes, and especially here in the spiders. As of right now, we gapped up above the 200 EMA. You can see the volume is decreasing. That's actually very constructive. When you gap up, or gap down, in this case gap up, get above the 200 and you consolidate on decreasing volume, that's actually very constructive for a continuation move. Now, the one thing that's very, very interesting that we should be watching here is we still have this downtrend that we're working off of here, and then if we even get a little bit sharper, we could take it down, and the resistance level would be somewhere up just about this 141 level, I believe it is. Yeah, right around 140, 140.50 up in that area. So we have a couple of things going on here. We gapped up, pushed up. The constructive action still looks good. We pushed up, holding on light volume, got above the 200 period moving average. Now working off of the resistance just above us, just above 140, maybe 140.40 in that area, is the resistance from the downtrend to the moving averages, where we keep making pivot highs and lower pivot highs. So the downtrend is technically still intact. However, you cannot ignore that igniting action. I know Scott mentioned it a couple of days last week, where if it is accumulation, where we're starting to see where we might get a push higher into the end of the year, usually by somewhere between the 4th and 7th day after what might be conceived as the first day, which was that outside day in the spiders, we should start to see another type of day like that. Now, what you'd be looking for, and again, this is all setting up trade expectation and whether or not you can feel comfortable and have conviction on the long side, You should see another day similar to what we had on that outside reversal day, where we have a good day where we close higher, close above the open, and it happens on good significant volume. So we have a couple of different things going on now. We have that resistance from the trend line coming in. Now I want to point out two other things. First, I want to go to the VIX. Let me just get that off the screen. All right, the VIX actually measures, obviously the VIX measures volatility, whether or not stocks are moving at a faster pace on a day-by-day basis. When the VIX makes a new 5-day low, as it did here, and reverses intraday, now again, we have to take it with a little bit of a grain of salt, the fact that it happened on lighter volume, but when it closes at a new 5-day low and reverses to the upside, more often than not, that means that the next day is a short day or a selling day. Now I want to follow that up with looking at a couple of the financials and tie this all together with how it affects trade expectation coming into the day. If we look at Citigroup, and again, take into consideration that the spiders closed on their highs. Citigroup closed below its open. JP Morgan finished below its open. And Goldman Sachs finished below its open. So on a day where the market closed at or near its highs, we paused on light volumes. The market or the indices itself in general looks constructive. However, the financials, and especially if you go to Goldman Sachs, we had some bigger volume on a relatively light day, closing below the open. So you take into consideration the market indice looks constructive. However, the VIX reversed and closed higher intraday, which means that there's a little bit of fear coming into the market, or maybe that it's the right price level to constructively move the short-term downtrend again. So what does that all mean? If we can just come back for a second. What it all means is that from my trading perspective, your job as a trader is to set up opportunities where if and when you have losing trades, you want those to be on your best ideas and just accept the losing trades as a part of doing business. What we're seeing here is a little bit of conflicting price action to set up trades. We're not going to generally move without the financials participating in any kind of a solid way, which we saw twice this year where we had these 3-month to 4-month runs to the upside. The financials were right there with us. The fact that the financials were a little bit weaker on Friday and the VIX reversed intraday and closed at or near the highs, that's not constructive for wanting to be long. When you put that into context with the spiders, we have a little bit of a conflict with conviction to the long side. So what that means for me from a trade expectation perspective, it means that all of that money, all of what I would need to see is not necessarily on the same side. So to go back to what Scott had mentioned last week, before I start to get a little more aggressive on the long side, what I'd like to see is a little bit more of that type of accumulation day. So you look for that type of day as it starts to unfold intraday. We get good volume to the upside, a good strong close to the upside. It will negate the fact that maybe the financials are a little bit weaker right now. And also those financials are all at resistance and not popping through that resistance. All right. So we want to go through a couple of opportunities. That sets up the trade expectation where it's a little bit lower, especially heading into a shorter weekend. But you have to do that every day where you're game planning. Is everything to me that says I should be aggressively long or even aggressively short lining up? And right now there's a little bit of a mixed picture. So you lower your risk a little bit if the risk justifies it at all in relation to the expectation for what you would perceive as follow through. So if we can go to a couple of opportunities right now, we'll take a look at some trading setups that we have for today. Obviously, we're going to go to Apple, the one that seems to be on everybody's list. And this is actually why I brought up making sure that we're all looking at the same moving averages. This is the 200 period exponential moving average as well as the 21. We actually had called when it bottomed out down here in the active trader private mentoring room. We said that we liked the short, but we didn't like it until it got back up to the 200. We didn't expect it to get there basically in a day and a half, but it did. So now Apple and a couple of other stocks, Wal Mart, have set up inside days. Now, those inside days are technically setting up breakout days. So from a technical perspective, Walmart and Apple, inside days on Friday, inside days set up a consolidation. Consolidation usually sets up an expansion of volatility. Now, one thing you have to like about the Apple move here is look at the decrease in volume here as it's consolidating. That's very, very constructive. But there's two setups here. One is the inside day setting up what would be perceived as a trend day, and then 570 is dual moving average resistance. So really the level to get above, to get aggressive on the long side in Apples, it would have to clear this 570 level. Okay. Getting into a couple of other ones that have some constructive action on the long side. TSO, really nice breakout. You can see here, basically for most of October and into November, it couldn't get past this 39 level, finally did, and actually punctured it on pretty good volume. Just above 44 is the next level, so I'm looking for intraday continuation patterns in TSO, looking at 44.50 as the first target up there. CRM as well had a really nice day on good volume on Friday. You can see that the moving averages are all below where the price closed. We just barely took out this level, just below what's the price here, 159.85. If we can clear this level and get some flags intraday, that looks like a good stock to be trading with some conviction if it could take out the 160 level. Getting into Visa, again, starting to push up to all-time highs. You have to like this one. It just continues to make higher lows across the board and continuing to close above the open. I like this one a lot. Again, setting up an inside day as well, looking for a breakout to the upside. Following up at the last few here, getting into the holiday season. Target actually broke above and is now above most of the key moving averages, as well as Macy's actually looking a little bit better. You can see we have basically a quadruple top here in Macy's at 41 going back to October. If we can get above this 41, especially 42, we have some room to go to the upside there as well. Another stock that's setting up a very clean level to be looking to trade on a breakout is Qualcomm. Got quite a few people looking at the 63 level here. One thing to keep in mind, let it get above the 63. You don't want to get chopped up in this mess here. Look at all the tails in here. Let it get above 63. Let it clear. You got just below 64 and then 65. So you basically have $1 increments if it could take out that level. And last but not least, we have Hewlett-Packard, which has been off the radar for a while. But I want to make a call here on some capitulation where we've had this really, really long down move in this stock going back weeks, if not months, and then we take it back to the daily chart. You have this monster volume day. I'm not talking about the news. Evan and I are very clear we don't trade the news, but you cannot ignore this massive spike in volume after this big down day, and we actually closed above the open the next day. I'm actually going to be looking for Hewlett-Packard to start to reverse this downtrend based on the recent price action, the gap, the volume, and the fact that we closed stronger. I want to get into Monsanto as another trade to possibly look at from the long side. Very interesting here that we held the 200 perfectly. Now we've had 1, 2, 3, 4, 5 days in a row where we've closed above the open as well as the gap in there. If we can clear this 90, 92, we got some room above that level as well. So we're looking for some stocks that are displaying relative strength. And the final sector we're going to look at here is OIH. Similar to what we saw in Monsanto, but not quite as strong. But we could be having the start of the same thing where we pushed down, gapped. Couple of days we were holding 2 inside days in a row and a little bit of constructive action there as well. And we'll look at the Schlumberger, very similar price action. You can see Schlumberger here, if we get above 71.50, we could have something to do there as well. Just below 75 would be the first target. So getting back to wrapping up today, a little bit of mixed picture there with the financials and the VIX versus what we're seeing in the indices. If you feel like the market is not quite as clear as what you like to see in the financials, stick to stuff that is stock specific. We just mentioned a few trades that are inside days looking for trend days. Now, what's so important about trading those inside days leading to trend days, if you're normally a scalper or somebody who gets the next move, you do not want to fade or trade against days when they break out of inside days. They normally just slowly grind higher that day, and you want to get caught on the wrong side of a trend day. But the opposite of that is if an inside day leads to a trend day, you can have some really clean, easier type trades where you just stick with that trend intraday. So we have some pretty good opportunities today considering the light volume in the shortened day today. So be very tactical today. Unless you have a stock really lining up with some good room to go, make sure it's trading very, very well in time and sales. Make sure there's liquidity. Make sure there's activity. If there's not, perfectly okay to step aside, have another relaxing day. If we do have some opportunities, I'll see you in the main virtual trading floor, and we'll call them out together. Have a great weekend, everybody.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.